Welcome to Fuller Speed Ahead. I'm Craig Fuller, coming to you from Elder Mountain, just outside of Chattanooga, Tennessee. Today, I'm joined with Chad Eichelberger, the president of Reliance Partners, an insurance company that's focused on the trucking industry, also based here in Chattanooga, Tennessee. Chad, how are you enjoying your time away from the office?
Well, you may see that in a moment when my son pops his head in here like he has on several of these calls, but making the best of it and a lot of these face-to-face meetings now. I'm learning a lot about technology, so I feel a lot more confident in my ability to have one of these meetings than I did a few weeks ago.
It is interesting how different things are now, and I always like seeing people's the background of their homes. You look like you're in like a blue box. Like
I'm in my bedroom because my kids are going to barge in at any moment, and this is the most secure place for me to actually have a phone call. So,
Okay,
but
very
we'll
fair.
see how it goes. But yeah, it's a little bright.
Well, the wife and the baby will come up here, and then the dog will come up. Ellie will come up when she wants to be taken outside. So I know the feeling. It is things are different now, but even on national TV, on whether it's Bloomberg or CNBC, because they're doing this remotely as well, you'll see people's kids show up and dogs bark, and it is interesting how different it is. We do a lot of national TV interviews that interview us on national TV. And traditionally, we had to go into a studio. You had to go into one of the local TV affiliates to do a broadcast studios. A lot of motion there. But now even the large and most formal networks have changed where you can do it from your home. So hopefully, as someone who does some of this, I hope this is permanent because it certainly allows us to do more and not feel like the video is less than quality. But want to talk a lot about what's happening. COVID is impacting everything across the freight market. What is it you guys are seeing and experiencing right now related to coronavirus and COVID?
Well, so obviously we're in the commercial insurance space, focused on freight brokerage and trucking companies. The majority of our business comes from trucking companies, and so we've really seen a mixture of things. So we've got fleets that we insure that are hundreds of units that are saying they've never been busier, but then we've also got fleets that are struggling, and it really when I look at it, really, if you break it down by mode, we first started seeing. Probably about a month ago, the fuel haulers were having some issues. There were more payment issues around fuel haulers. More recently, it's been the flatbed. And now we're seeing just a little uptick in the failures on the dry van side. Dumps we're seeing failures there. Our refrigerated guys seem to be performing well still in terms of how we measure cancellations. So it really runs the gamut. It's all over the board. And so far, we haven't seen a huge amount of concentration really that's geographic specific. It's been all over.
Now, why would the fuel haulers? I understand the auto haulers shut down, but fuel haulers, what's causing them issues?
Well, the auto haulers and the fuel haulers were the first two, and I think what we're seeing from the fuel haulers is one, you've got less. There's less gasoline being consumed right now, so the stations are not bombarded with people. They're not getting as many turns a day. They seem to still, for the ones that we work with, they seem to still have volume in their network, but it's well diminished. So the guys that were on the edge, or the trucking companies that were already struggling a little bit, obviously we've seen them struggle the most. The auto hauler market is really dead. And then flatbed, increasingly over the last couple of weeks, we're seeing more challenges in that market as well, just because of the industrial side and building materials and just the lack of demand right now.
Yeah, I could imagine, thinking about the fuel haulers, because it's interesting. I haven't heard that, but with oil prices being at 20-year lows and oil dropping as far as it's dropped, as fast as it's dropped, I would imagine that there are credit issues and just financing cash flow issues with folks that are in the refinery space or in the production space and the drilling space. And I would imagine that's created a lot of strain for those haulers, and particularly haulers that are out taking oil from the wells into the refineries. As those wells have shut down, I imagine that's created a lot of issues for that particular group of people.
Yeah, and we see a lot. We do a lot of business in Texas. It's one of our larger states. And just in terms of Texas, a lot of impact, the truckers that support the fracking space. When you start to look at the guys that are hauling the water and the sand and the raw materials, everything that's going into that, we've seen an impact there as well. And just the dump operations. I had one of our sales guys talking to me the other day and said, "Hey, I had this account, 16 units, and he said, and he runs all dumps, and he's had one or two loads for his entire fleet in the past 2 weeks. So needless to say, he's not going to renew his policy." And that was a prospect for us. But at the same time, I think you're going to see more and more of that over the coming weeks.
So you've seen a lot of churn. Have we seen the general freight? You mentioned reefer folks are doing well, but in terms of dry van freight, are you seeing any pressure there?
Not overall right now. I mean, we've seen and I wouldn't say it's significant enough to even really be a statistic because we measure it across modes, and we've certainly seen an uptick overall. All the modes I mentioned to you, dry van appears to be trending along about the same as it was before, just in terms of when we look at failures. And we also look at negative endorsements, and in terms of if trucking companies are removing equipment or adding equipment. We have seen a higher net negative endorsement number over the past month, but that doesn't really seem to be in direct correlation with what's happening with dry van, and certainly not reefer. I will say we're seeing on the refrigerated side, we've seen some flatbed haulers where we have to go and modify their cargo policy because they've gone out and leased a couple of refrigerated trailers, or they've done this or that. So I think you're going to see some of these entrants are going to try to jump from flatbed over the refrigerated market as well.
What does negative net endorsements mean exactly?
So when we look at it on a rolling basis, we measure the endorsements we see every single month that come in from our clients. And in a typical month, it's a net positive because that means they're going and modifying policies, whether they add a truck, it could be they delete a truck, they go in and add something in their policy, or they raise the limit specific to a customer or a freight broker. And typically that number historically for us has usually been a positive. We've seen, I think there was 1 or 2 months last year it was a negative, and we've seen it as a negative right now, and specifically correlated around those, the flatbed and the AutoHaulers and the dumps and, the modes that are most susceptible in this type of downturn, at least on the front end. So, but really it's just when you look at the total policy, is the policy getting bigger as we have it, or is it getting smaller? And this is a month where on average, the changes made to policies decrease the size of the policies that were already in effect.
So does this mean, in terms of folks that are not in the insurance business, does this mean effectively that there are trucks and basically capacity leaving the industry? Is that the way I should think about it when you talk about negative endorsements?
Yeah, and I would say capacity leaving the industry, but then we also see some of those are leased on to other companies. But again, those would be a positive endorsement there. We don't always capture it, so that's why I wouldn't say our data is scientific. I mean, we're a $150 million premium agency, so in terms of what we have, I don't think it's enough that you can apply it to the whole industry. But per se, we feel like there's some movement going on. I don't think it's drastic by any means, but I'm sure it's going to pick up over the coming weeks.
Now, you guys are the fastest growing or among the fastest growing insurance companies in the country. You also are really focused on that small fleet operator and trucking operator. So conceptually, if you're seeing pressure as aggressively as you guys have grown, I would imagine the broader market's seeing pressure.
I would think so. I mean, our new business number, we had our best number in company history last month, just in terms of new business and renewed business. But March is historically a very favorable month for us on that front. So I'm sure there's pressure across the board. Our fleets are holding up pretty well overall. Again, you've got certain modes that they're struggling. We're also seeing orders from markets and from different states in terms of cancellations and not allowing insurance companies. And we're obviously a retail agent, but the markets we represent, there are some of them now that are going out there, in effect, putting these moratoriums, whether it's state related or the markets trying to keep these truckers in a position to continue to be able to haul, where they're putting these moratoriums where you can't cancel a policy for non-payment. And so I think that's something that's going to continue. I think it doesn't mean I wouldn't advise every trucking company out there to take advantage of it. You're going to have to eventually pay it, but it's something to monitor, and maybe a way that some trucking companies can get some relief and be able to catch back up from a payment perspective.
Now you're suggesting that if you have an insurance policy, you may be able to get negotiate some delayed payments, deferred payments for a few months, just because the insurance companies may have some leniency. Is that what you're saying?
Yeah, and then on top of that, there are certain states, I think there's 13 or 14 of them right now, but Louisiana, I know specifically, they've gone out there and they've put a date, and I believe it's May 12th, don't quote me on that, where you cannot cancel. If you're an insurance company, you can't cancel a client because of non-payment during that time, and you can't opt to non-renew them because of non-payment. Now, if they do something to violate the terms of the policy, they can be canceled. So I think it's going to be really interesting to see how the different states deal with that, how the insurance markets deal with that. And then obviously you've got retail agencies like us, and you have finance companies. It's in everybody's best interest to see these trucking companies stay in business and continue to operate. And I think that's what you're seeing, the consensus there, whether it's mandated by law or the insurance companies are just working to, help the trucker.
Yeah, we've seen that certainly in the rent markets. Certain cities like New York have said you don't have to pay your rent for 2 months. I talked to a very large landlord. He's got a lot of properties across the country, actually across the world. And they said it was 2 days ago, and they said, well, tomorrow's April 1st. It's going to be a big day. And I was sort of confused because I thought he was excited about April Fool's Day. And he said, no, this is the day that rent's due, and we're going to see how that works. So it's certainly a stressful time if you own assets, whether it's trucks or places of rent, commercial properties or residential properties. But it's also a time where the market's under a lot of stress. Are you hearing finance companies that are giving fleets some time to pay? Or I know that's a different world than you guys are in, but are you seeing that as well?
So on the finance front, we're seeing companies tighten their down payment terms as far as what they want to see down on a new policy. We've still, depending on the operation, there's some flexibility there, but at the same time, they've certainly gotten tighter with that because their exposure, they're obviously concerned about the market. As it relates to payments, we've got some companies that are working with clients and working to waive late fees, and then we've got others that so far haven't come off of what they were already doing. So it'll be interesting to watch. I would imagine you're going to see everybody try to be more flexible right now, just in the best interest of these companies.
So you think the message to the audience that's tuning in watching this, perhaps if they're small fleet owners, operators, is reach out to your insurance companies, talk about what options you have, reach out to your finance company, talk about what options you may have. Really, basically, everybody knows what's happening, and time is to communicate and see what options are available. Is that what you would suggest?
Yeah, absolutely. And we've asked all of our account managers that handle the day-to-day relationships with clients and with insurance markets that we're asking about business. We're asking about in terms of you're adding this equipment or you're deleting this equipment, and we're hearing the stories of, hey, it's tough out there right now. And so we're going out on their behalf and trying to talk to insurance markets about, is there anything we can do here to help them or to break this up? And a lot of times the finance companies really can control that. It's all dependent on if it's a direct market relationship or it's a finance policy through a market that we may not have directly.
Now, what are you seeing on the safety side? The Department of Transportation, the FMCSA, has waived on all 50 states the hours of service requirements if you're hauling certain types of relief goods or medical supplies or certain types of items that are needed. What are you hearing in terms of safety out there? I would imagine no traffic. It's got to be a huge benefit for drivers, but how are they handling the exposure of their driver populations?
So what we're hearing, there's a lot of fleets that, they've given their drivers criteria, just in terms of, you're going to go from here to here. You're going to pre-plan where you're going to be parking at more often than not, as opposed to what you did before, at truck stops, limit interaction. We're hearing a lot about that. Any type of distancing requirements, if you're in facilities or if you're with dock workers. There's just a lot of that going on right now. What you're hearing really on, if you're turning into CNN or Fox News, the same type of things that advising these drivers to be careful and to be safe, because they're out there and they're the ones that are really keeping America running right now. And if they're not being safe, or suddenly we start to have this pandemic hit the driver population, it's very concerning.
Chad, people only watch FreightWaves TV that tune into this channel. No other news. That's all that matters. So, but I'm joking, of course. What liability do fleets have in terms of that you're aware right now to their drivers if they get exposed? Do they have to provide any type of safety equipment that you're aware of, or?
Not that I'm aware of. I wouldn't say that. I think if you're negligent as an employer, and you knew of an exposure that was present, and you intentionally sent that person into there, and it was a forced dispatch situation, who knows? It's whatever a court's going to say in the longer term. I mean, anybody can allege anything, but to my knowledge, I haven't seen anything so far in this that has really, proven that to be something that you've got to be mindful of. And I haven't seen anybody going out there and just putting somebody in harm's way intentionally. Most of these drivers, they understand the risks that are out there. They're trying to take precautions, and some of the exposure piece for them, it's unavoidable.
Yeah, I've actually heard not so much in the driver population of being forced dispatched and to go into situations, but I've actually heard in freight brokerages and other companies where someone has gotten sick and they made them work it out, or they were there getting a couple days of exposure. So we've heard situations like that, but I'm not aware of any drivers that have been personally exposed that have been forced to stay out and such. And the FMCSA has put out some instructions for helping to provide some information. The CDC has also done that. States are also putting information out. We are hearing that the shipper population, as well as the commercial truck stops, have stepped up in terms of providing cleaning supplies, increased janitorial services, have closed their restaurants and facilities inside to mitigate spread. We're hearing that certain fast food restaurants are opening up drive-thrus that are specific for trucks. So there is some effort. Maybe it's not enough, and I would suggest it's never enough to do stuff for our driving community, but we are seeing some promising signs, realizing how important the drivers are. Any other message, Chad, that fleet should be thinking about right now, if you own a fleet, what you should be doing?
One, thinking about your mix of freight and what kind of exposure you have there, because obviously as reading through FreightWaves this morning, and we start to look at that demand curve, and we're starting to see it shift. At least it looks like the leading indicator of maybe a shift. I would be really mindful about what I'm hauling, and because I've got trucking companies and we've got freight brokerages. We've got people that are mail haulers and have very stable lanes that aren't really going anywhere. We've got freight brokers that are heavy food and beverage. I was talking to one yesterday, and his feedback to me was, we're looking at our advanced tenders, and they're actually flat to maybe a little bit up. But then I talked to another freight broker, and they're planning pretty significant cuts to their business as a whole, because they have exposure all over the board. And so I would think about freight mix. I would obviously think about continuity of operations and any type of shutdown, which certainly more and more states we're seeing that happen in. I would just be mindful of what resources you've got out there for your drivers. How are you going to operate remotely, which a lot of that's, I think, been addressed now in the run-up of the last couple of weeks. But just thinking about also things like your fuel expenses and your insurance payments, and what expenses do you have that if you needed to, you could spread out over a longer period of time so you can continue to operate. And the last thing I would say related to insurance would be the type of policy that you go on. If your insurance policy is coming up for renewal in the coming months, consider looking at some type of reporting form that is more driven around mileage or revenue, that's going to be more attributable back to your fleet over the course of the longer term. If you do have a downturn for 2 or 3 months, that you don't have this flat rated policy per truck that's not going to paint a clear indication of what really happened over the next year of your policy.
Yeah, there are a lot of resources out there. The nice thing is you're not alone in this. I know that it's like almost become a cliche where everybody's saying you're not alone, but it's true. Everyone around the world is facing the same set of circumstances. And if you're having cash flow issues, paying your insurance, paying for your truck, reach out to your resources, whether it's your bank and finance company, your insurance company, insurance brokerage. I'm sure Reliance for folks that have worked with you guys, they can also reach out and talk to you, right?
Yeah, absolutely. We're happy to help any way we can. And we don't always have the answer, but at a minimum, we can go out there, or whoever you're insured with from a broker standpoint can go out on your behalf and work to help, or to even see if there's a way to soften that. And I'm sure, just like equipment leasing is the other place. I've heard about equipment leasing companies are getting a little bit more lenient in terms of the same thing we've been talking about.
Yeah, factoring companies, if you're talking about financing, can also be a great resource to talk to those that are helping you manage it. This is a time where those organizations that are in these types of businesses are fantastic resources. Chad, you guys are open for business. You're not in the office, but you are operating. If someone can't get a hold of their commercial insurance broker today, are they, even if their policy was not originated by you guys, are you guys able to take those calls and help them find resources?
Yeah, we're willing to help anybody. Now, there's things we can't speak to them about. We can talk to them about their policy in general. We don't have insight into it unless we're the agent of record on the policy, but we'd be happy to give anybody feedback around this is the policy they're on. A lot of times we'll go, and when we look at a risk, we look at radius of operation. We look at where they're domiciled, where they're going to, size of the fleet, growth of the fleet, obviously the safety factors. And so generally speaking, we can look at an account in a few seconds and have a good idea. Are they with the market that's the most appropriate fit, or maybe in this case, the most flexible from a financial standpoint, or maybe most creative in being able to spread out payments or not have a large down payment. So those are things we're happy to do for anybody.
So just help them navigate what's happening. You have multilingual as well. If you have someone who's particularly in this environment where it may be more difficult, particularly because just offices are closed, people are spread out, and there's a lot of difficulty. You have a lot of languages that may be able to answer. Perhaps you have a friend or somebody else that owns a fleet that is not a native English speaker. You have resources that can help them. And really, the bottom line is there's a lot of resources out there. Be sure to take advantage of them. FreightWaves.com is going to continue to keep you informed. Please tune in. Tune in to FreightWaves TV. You can see us on Apple TV, on Roku, as well as directly on tv.freightwaves.com. And coming up on May 5th, 6th, and now the 7th, we've added a third day, we have the FreightWaves virtual at-home experience. So it's FreightWaves Live, like you would get coming to one of our conferences, but actually it's all done virtually. All of the conversations are going to be virtual, and we're excited to have that. We have speakers from all over the industry coming to talk about not only what's happening around technology, but circumstances like this, right? A lot of stuff happening, a lot of information is going to be there. We're certainly excited and honored to host our first virtual conference, so looking forward to that. If you want to get in touch with Chad, what's the best way to reach you?
Well, I don't want to give my cell phone number out, but I think everybody in the country already has it. It seems like anytime we get I got a premium payment issue, I'm calling it. But no, feel free to call us, 877-668-1704. Visit our website. We've got 19 different languages spoken, 8 offices around the country. We'd be happy to help, or at a minimum, be there to say, yeah, you're in the best spot you can be. We can't do anything to help you, but we'd be more than happy to take a look if we can.
Well, Chad, thanks for coming today, and thanks for being on the show. We hope to have you back.
Yeah, thanks for having me, Craig.